needs more. So we'll get to that later on in the week. This afternoon, we've got Ford, we've got VF Corp, we've got F5 reporting. We've got our senior markets correspondents, Mr. Kevin Green, back alongside Caroline Woods, KG, and C-Dubs. What's up, guys? Ford, I feel like, is kind of a fun one here because we got Tesla rallying on earnings. We had GM doing great on earnings. Ford has been the very clear, laggard, to be nice, in this category, Caroline. So we'll see what they can do. What do you think is the bar for them now?
The clear laggard, unless you look at Stellantis's stock chart.
Okay, or some of the Chinese ones
Ford
maybe.
Actually doesn't look, it doesn't look so bad. But yeah, Ford has definitely underperformed. And GM, of course, beat and raised when it reported. And then Tesla, obviously, with a more than 20% pop following earnings. Kind of the pressure is on for Ford. It was higher today, up actually almost 3% heading into this report, up almost 8% this month heading in. I will say a lot of the analyst commentary is, still kind of downbeat. Most are sitting on the sidelines, the majority of analysts. And keep in mind, Q2 was pretty disappointing due to those unexpected warranty costs. So we saw shares absolutely plummet when it reported last time. So I think that hopefully we don't see a repeat of that. But, I think that aside from the big numbers, I think analysts and investors will also just be looking for, smaller EV losses and any commentary about targets there, if you will.
Good stuff. Yeah, good point. Losses being the operative word there. F5 has some tech implications. VFC is like a fun retail disaster story. What are you interested in, Mr. Green?
I think F5, if you're kind of looking at the cloud space along with a little bit of security, I think that's going to be a name that kind of gives us a little bit of insight as to the shift within that space, especially after the CrowdStrike fiasco we saw a couple of months ago. They could be maybe a small beneficiary of that, and we'll see if enterprise spend, especially when it comes to mid-sized and small-sized businesses, if that is actually continuing to shift towards AI and less when it comes to cloud infrastructure and cloud rollouts here. So I think that's going to be an interesting one. VFC is always going to be a nice from a consumer standpoint, but I like the cloud name right now.
Okay. F5 important for basically all of our kind of internet consumption of content that sometimes gets underappreciated, but the market has appreciated it pretty well on the year, which has been solid. But I will say, valuation-wise, not very expensive for a stock that's about on pace with the S&P 500 for the year, a little bit less. It's not too expensive at all, really, so cheaper than the S&P 500. So that kind of makes it interesting, and also maybe gives us some indication for the cloud stuff this week, given how important that's going to be for Microsoft, for Alphabet. We always want any thread of connection, Caroline, that we can get.
Yeah, and I think, when it comes to valuations also, if you take a look for all three of these in terms of what the analyst community is thinking, for Ford, F5, and VF Corp, the majority of analysts on the sidelines, the most for F5 actually, 86% of analysts rated as a hold right now.
Wow,
and if you take a look at Ford and F5, the median price target for both is below where it actually closed today. For F5, it's 206.57, according to LSEG, so it closed at 218.36. And then for Ford, 11.32 is the median. VF Corp, the median's 18, so less than $1 away from where it ended up closing today. So it's certainly not any bullishness from the analyst community heading into there. I will say for VF Corp, we had talked about, I think it was last week or the week before, it got a downgrade from Wells Fargo in terms of valuation. JP Morgan put it on a negative catalyst watch, but UBS was out with a relatively positive report, basically saying fundamentals are likely weak, but the bar is low.
True.
So not necessarily the best investment,
for sure,
thesis, if you will, but still, if the bar is low enough, maybe VF Corp can actually clear it.
Well, it looks like it might bounce a little bit. I want to come back to that in just a sec, because again, I feel like that's a long ship that's got to turn around for VF Corp. I know it's been okay on the year, but the last couple of years they've been getting crushed. F5, I think, as we all determined here, the most important one. So let's go there, and I think kind of to some extent validating what I just said, as the shares are now up about 18 bucks. That's crazy that so many analysts, by the way, it's really great context. Only a single analyst of 14 has had a buy rating on F5, even though it seems like it is still an important player in a lot of these growth themes in tech and cloud, and for the valuation too. If you're looking for like a value tech trade, up 22% and still trading below S&P's forward PE is a pretty nice setup here. So, all right, we do get a little bit of a pop. Revenue growth is going to be between 4 to 5% next year for the fiscal year. The trailing earnings beat 367 versus 346. It does look like they generally came ahead of estimates. Well, how come the growth, is that possibly why folks aren't willing to pay up too much for the stock? KG, what's your thought here?
Well, they did see also a 19% increase when it came to software revenue. Now, that was actually a little bit of a concern last go around when you're looking at a lot of these cloud names as well as the networking names, that software spend was going to dry up a little bit, and you're going to look at more enterprise spending on the hardware side as a lot of these companies start to ramp up their AI infrastructure. And they're basically saying that's not the case. We actually do see a lot of strength there. And then they also mentioned the cost discipline, which is the reason why they did see that bottom line beat. Overall, I mean, this is actually a really good report. What is actually interesting, too, where we did see some unusual activity in the 240 calls today. So let's see if that's going to be an area of resistance for the stock in the after hours, or maybe it does try to push through. And if so, maybe you see a little bit of a gamma squeeze taking place in this name.
Yeah. Is there enough trading? Is it pretty juicy in F5?
You got enough contracts to, I mean, it doesn't trade a lot, but you do have enough contracts to really, spark some interest. And we saw this kind of with Tesla, kind of a different name, obviously, but it's not only just what's going to happen today, but also when the market opens tomorrow. And if you have this enthusiasm kind of percolate with a lot of these retail investors that start utilizing the options market in order to get exposure, you can continue to see a melt up in the stock for the next couple of days. I'm not sure if that's going to be the case here, but 240 is going to be your level of resistance that it needs to break in order to try to create that environment for a continued melt for tomorrow.
All right, well, it's pushing right now. It's trying to go for it. So we're off to a pretty good start here to apply some buying pressure to anybody that was on the other side of this. $240 basically right now. Pretty solid report. They're also going to throw in another $1 billion on a share buyback. So a lot of things here for the market to chew on. VFC, as I mentioned, is up. Ford is also out, too. I'll go where you want, Caroline. What you got your eyes on?
I'm looking at Ford right now.
Okay.
It was a in line on the bottom line. If you take a look, adjusted EPS of 49 cents. I did see some estimates that were a bit lower than that, in which case it would be a beat, but basically in line on a top line beat here by quite a wide margin. The expectation was for $41.2 billion. Ford came in with $46.2 billion in revenue. In terms of the outlook, saying now that they expect $10 billion in EBIT for the fiscal year 2024. Previously, they had said between adjusted EBIT of between $10 and $12 billion. So that's at the low end of that previous range. But it was, I'm taking a look. It looks like shares are actually a little bit lower now, possibly because of that guidance from Ford. But if you take a look at the trailing numbers, it was in line and then a beat in terms of revenue. And actually, full year adjusted free cash flow of $7.5 to $8.5 billion. That's in line with what it previously said as well.
Yeah, nothing really encouraging or new, particularly on the news side. I guess market gonna kind of apply the same thought process it was before when nothing really beats in a big way. I guess the positive is that it hasn't gotten worse. They're reducing some of their CapEx marginally, where they had said they might spend upwards of $9 billion. Now they're saying it's going to be upwards of 8.5. So that doesn't seem to scream confidence to me in a highly competitive market for new cars. I mean, I know that there's been price cuts and stuff, so competitive in the sense that demand is not soaring, but technologically, I would think the pressure is still very much on them. What do you think, KG?
Well, so here's where they diverge from GM. GM has really kind of pulled back when it comes to the EV side of the business, really kind of doubling down on ICE vehicles and then looking at the hybrid space. And with them doing that, they're going to be cutting a lot of costs when it comes to the EVs. Ford hasn't been as aggressive, and in fact, they actually are looking at the outlook for the full year. The Model E is looking at an EBIT loss of around $5 billion. So that's still going to be a massive drag on their company here, and it doesn't seem like they want to pivot away from the electric vehicle space here, and that's just been very tough to try to scale. And so until they actually try to shed that business off or try to dampen down those expectations and really kind of double down on the ICE vehicles, which, you know, I understand the vision moving forward here, Oliver, but ICE vehicles actually do see very strong demand still. It's not like the consumer is really trying to buy up a lot of these electric vehicles at the moment. And that's why GM kind of shifted its focus. Ford hasn't done it as aggressively. I think that's why you're seeing that premium disconnect between what GM's doing and what Ford's doing. Until they actually shift that, I think it's going to be very hard to try to fill that gap that we've seen on that chart from the last earnings announcement.
Yeah. Fair enough. True. I guess right now they're kind of representing the ICE model still for the most part to that point. Ford Blue revenue. So they've got their EVs, the E's, and then they've got the Blue. Blue revenue 26.2 billion versus 24.6. You're a truck guy, right, KG? I mean, like, people still view this as the standard, right? And that's kind of where they're doubling down and saying nobody's going to take this market. The EV truck scene maybe is not a big one yet, so that's their pillar. But is that like a growth story?
I think it's a hybrid. A hybrid model would actually fit this market very well, Oliver. So the scare, especially when you're looking at Ford, it's not so much the consumer, it's the industrial application, right? It's the construction application. And if you have to kind of worry about the battery side and you're not able to do certain tasks because it could drain your battery faster or what have you, that's why you might not get a significant amount of buyers getting into that type of model. But there are some really good hybrid models that are out there that are comparable to ICE vehicles. And once again, I don't think GM's doing it the right way, trying to go with hybrids and ICE. Ford's really just trying to focus on EV. And I just don't think that you're going to see a lot of buyers into that space until the infrastructure grows. And unfortunately, the biggest player when it comes to the infrastructure spend is Tesla, and Tesla's actually pulling back on the network. So
fair enough.
It's going to be
all right.
Infrastructure there.
Not enough to go around, not enough perhaps to warrant their big pivot, but they're kind of stuck though because the market doesn't seem to be a lot of growth either in like the ICE market. I mean, you could have like market share take, I suppose, but like broad growth, stock's still been kind of stuck. All right, I don't know much about trucks, but Caroline, I know a good bit about shoes. I know you do too. VF Corp's been kind of struggling, but to your point from the analyst commentary that maybe some of the worst market share has been lost now to competitors, that perhaps a slight beat here is welcome.
Yeah, I mean, it seems like maybe the bar was low enough because we're seeing a nice pop following a beat on both the top and bottom line. And this is despite the fact that Q3 revenue forecast actually fell short of what analysts were looking for. So just to go to the trailing numbers for Q2, adjusted EPS of 60 cents easily topped the 41 cents that analysts were looking for. Revenue, meanwhile, came in at 2.8 billion. The expectation was for 2.7 billion. Of course, North Face is one of the brands that was down 3% as expected and compares against a strong, they're trying to just basically talk about the comparisons, but Vans, the shoes component down 11% versus last year, down in terms of, that was actually a pretty weak spot though. If you take a look at last time they reported, it was down more than 20% in terms of the comps. But then in terms of Q3 2025 revenue outlook, 2.7 to 2.75 billion dollars, so a little bit shy of what they reported for Q2.
Yeah.
But the expectation was for 2.96 billion. So it seems like they're getting a pass based on the initial stock reaction. So maybe they're just focused on the trailing numbers, or maybe the fact that VF Corp is down 14%, this month heading into this report means that some of that disappointment is priced in at these levels, or who knows, maybe tomorrow will be a different story. But right now it looks like an earnings winner following this report.
Yeah, the expectations to tourniquet the bleeding down to like 4 to 5% sales contraction, because it was like 16, 15. I mean, they were just bleeding out last year. some hope here, Kevin. How closely do you follow the stock? What do you think?
I really don't follow the stock a lot, but I could tell you the company did sell off that Supreme business for what $1.475 billion. It looks like they used that proceeds to pay down the existing debt that they had outstanding. So if you're paying down debt, you're not going to have that revenue growth. Obviously, it comes from those expectations, but it does appear that they're going to make the bottom line when it comes to their guidance. And so you're less in the debt burden. You have a little bit less pressure, or a little less pressure when it comes to investor expectations for top line growth. Maybe in the near term, I think that's probably the winner and the reason why we're seeing the reaction the way it is. Balance sheet improvement rather than top line growth.
Nice. Okay. All right, EPS of continuing operations, a little ahead of expectations there. Good stuff. Thank you guys very much. Interesting little batch there.